Josh with JDB Business Solutions, and today we're going to go over how to fill out the tax form 1065, which is for the income tax return for a partnership, whether that's a general partnership or if you have an LLC with one or more people. For most of our audience, it's very small businesses. It's probably you and your wife, you and your husband, maybe you and a friend, one other person, and you have an LLC set up and you have to file a form 1065. So before we start, I'm going to give the usual caveat that I highly recommend that if you have a business, you hire a qualified CPA to prepare that for you. They're going to save you more money than you spend on them 9 times out of 10 if you have a good one. You're going to get yourselves in trouble if you try to do this, most of you. But if you are brave enough to go that route, you kind of do feel like you have an idea of what you're doing, this will help you do that. And if you want to help, just hire someone else to do it, understanding the form will help you get your documents organized enough to help them prepare the return, which will hopefully in turn lower the price that you're going to pay someone to do it. Having said that, we are accepting new clients for this tax season. You can find that on our website, cpajdb.com, or you can email us, cpajdb@gmail.com, and we can give you some pricing packages and be happy to work with you. We work with people all over the country, so be happy to bring you on board. We do have limited slots available, so please contact us soon if you're interested. All right, so to get started, we're going to go over just quickly the beginning here. You have to put in your principal business activity. We'll use my business, tax prep, the name of the partnership, JDB Business Solutions, your EIN number, just make one up here. The date the business started, so whenever you started the business. Your address, 555 X Street, city and town, normal stuff. Principal product or service, tax preparation, whatever it is for you. If you sell real estate sales, whatever. Business code, you'll have certain ones to choose from here if you're using tax software. If you're truly going to fill this out by hand, just Google business code number for whatever you do. So business code number for real estate sales. Something should come up and give you that there. Total assets, you don't need to put anything here yet. Okay, so now we get into Part G here, where you're checking the applicable boxes. If it's the first return you filed for your business, you're going to check initial return. If it's the last return you're filing for your business, if you closed it in the previous year, you're going to click that box. If you're changing your name, click that box. Changing your address, click that box. And if you're amending your return, if you originally filed it and now you have to change it, you're going to click box 5. If it's a technical termination, click that box. That's not something we're really going to go over. You don't have to worry about it at this time. Part H is going to be your accounting method. Most of you will be on the cash method. This means that you will recognize income as you receive it and expenses as you pay it. So it doesn't matter if someone owes you money. It's not income until they pay it to you. The accrual method, on the other hand, is the opposite. As soon as someone owes you money, it's considered income. And as soon as you owe someone else money, it's considered an expense, right? So if I perform tax return for someone and they haven't paid me by the end of the year, I still have to record that as income because I've already earned the income, okay? So most of you, probably 90% of you, will be on the cash method. Some of you may be on the accrual method. If you have accounts payable and accounts receivable, you're probably on the accrual method. If not, you're probably on the cash method, okay? Number of schedules K1, however many partners you have in the business, and check if schedules C and M3 are attached. Most of you won't have to worry about that. Okay, so we get on to box 1A here, and it's just gross receipts, the total that someone paid you, before any expenses, anything, just the exact number they paid you. Okay, so let's say they paid you $100,000 for the year. Your returns and allowances, if you're selling a product, especially if someone had requested a refund, you'd still include the amount that they paid you in gross receipts, and then you'd subtract it out under the returns and allowances. Okay, and then the balance on Part C, just Part A minus Part B, in this case $100,000. Cost of goods sold. This will mostly be if you're selling products. It's the cost to make those products, so the materials that go into it, the labor, everything that's directly associated with the product you sell. If you have a service, it is still possible to have cost of goods sold, especially this is true if you hire independent contractors to help you out. So if you can assign an independent contractor to a certain service that you performed, that would go under cost of goods sold, okay? And then part 3 will just be 1C minus 2, and in this case $100,000. And your ordinary income from other partnerships, estates, and trusts. If your partnership that you have is an owner in another partnership, an estate, or a trust, you're going to put that here with the K1 from that. 99% of you won't have to worry about that. Let's ignore that. Net farm profit. If your partnership is doing farming work, this is where that income would go. Net gain from Form 4797. This is if you sold any assets within the partnership. Okay, if you had a car that you sold that was part of your business, if you had machinery that you sold that was part of your business, you're either going to have a gain or a loss from that. And you're going to fill it out on Form 4797, and then the total is going to go in box 6 here. All right. Any other income, whether it's interest income from a bank account or any other form of income that wasn't covered in any of these boxes, you're going to put in part 7. And then part 8, you're just going to add all that up. In this case, still $100,000. You're going to put it there, right? Simple enough on the income. We go to box 9. This is salaries and wages. And this is not what you are paying you or any other people that are owners in the partnership, all right? This is just salaries and wages that you've paid employees. So that would go here. And then what you paid yourself and what you paid your partner, if you made actual payments, not distributions from the profits, but if you said, okay, I'm going to pay myself $2,000 every month, that'd be what they call guaranteed payments to partners, okay? So let's say I did $1,000 a month, $12,000 in guaranteed payments. Makes sense? Got a little too much there. Okay, box 11, repairs and maintenance. This is one that gets mixed up often. Repairs and maintenance only applies when something breaks in some form of your property or your assets that you have within the company. If you're doing improvements to any of those, that does not get listed here. Those get depreciated. Repairs and maintenance would be when something breaks and you have to spend money to get it to the same working condition it was at before. So if you have machinery that breaks down and you have to get it fixed, or something on your building breaks down and you have to get it fixed, that's going to go under repairs and maintenance. When you have to make improvements to that same property, that does not get listed here. That gets depreciated. And that's an area that a lot of people get mixed up. Okay? But repairs and maintenance will go in box 11. Anything you have to do to repair any of your machinery, your equipment, your buildings, your property, anything like that. Box 12 is bad debts. This is for those of you who have accounts receivable and it comes to a point where you just know someone's not going to pay you. So I did a tax return for someone last year. They were supposed to pay me $200 and they haven't paid me. I know for a fact they're never going to pay me. I'm never going to see that money. So that's going to get written off as bad debt. So we'll say I had $200 in bad debt. Rent is pretty straightforward. If you're renting an office space, equipment, anything that you're paying rent for that you don't own would go here. So if I had $1,000 a month in rent for an office, I'd have $12,000 there, okay? Taxes and licenses. This is, a lot of people have various licenses for their businesses. So I'm a CPA. I could put my renewal fee for my CPA license under there. Taxes, a lot of it would be payroll taxes. You may have property taxes. Anything except income taxes can be listed in box 14 with taxes and licenses. Okay, income taxes, your partnership does not pay income taxes, so that would not go there. Interest would be any interest expense you have, whether that's mortgage interest for a building, whether that's interest on a loan that you have for a car or equipment or machinery. Any kind of interest on loans that you have would go there. Box 16, A and B, that's for depreciation. Okay, it's hard to go over here. Depreciation is one of the big reasons I highly recommend hiring a CPA. It does get extremely confusing. Every asset has a different depreciation life. There's bonus depreciation you can take. There's what they call Section 179 depreciation. And it's just going to get very confusing. It's why I recommend using a CPA. But if you're going to do it yourself, you got to file Form 4562. That will figure out your depreciation, and that will go in box 16A. Okay. Depletion is pretty much along the same lines. It's a different form of depreciation, so we're going to ignore that here. Box 18, retirement plans. If you have a retirement plan for you or your employees, the cost of that would go here in box 18. Employee benefits programs. This would be for various benefit plans that you have for your employees, box 19. And then finally, box 20, other deductions. You're going to have to list these out separately, and you're going to have to attach a statement with them. So you can't just add them all up and put them in box 20. You're going to have to specifically list them out. A ton of various things that can go here. Auto and truck expenses, whether you're doing the mileage rate or the actual expenses, that would go in here. Cell phone, telephone, internet, anything that we haven't covered yet, anything that you've paid money for in your business, you'd go ahead and list in box 20 if you couldn't find another place to put it. If you're confused as to whether something goes in one of these boxes 9 through 19, or if you should list it separately in box 20, just go ahead and list it separately in box 20. It's not that important in which box it goes into. What's more important is that it gets accounted for correctly. All right, and if you can describe it, even better. The higher the expense is, the more specific you want to be with your descriptions, right? So if you have a $30,000 expense, you don't just want to label it miscellaneous. You want to describe specifically what you spent that $30,000 on, okay? And there's going to be a statement that you can do that on, and then the total is going to go in box 20, all right? And then you come to box 21. You're just going to add up all those expenses. So $12,000, $12,200, $24,200 in this case, okay? And then you're going to subtract that from your total income. So in this case, it would be $75,800, and that would be my ordinary business income or loss. So then what's going to happen, the way that a partnership works, the partnership itself does not pay taxes, okay? What happens is each of the partners get what they call a K-1, and that will distribute that income based on their ownership percentage. So if me and a partner own this 50-50, we're each going to get designated 50% of that income, and then we're going to report that on our personal income tax return, and that's where we're going to pay our taxes on it. All right, so the partnership does not pay taxes. This is basically an informational only return, and it spits out a K-1 that you use on your personal taxes. Now you're going to come down here under box 22. The managing member of the LLC is going to sign this. Or if it's a general partner, if it's just a general partnership, they're going to sign it. If you want the IRS to discuss this return with the preparer shown below, yes or no. That means if you paid someone to do it for you, if you paid me to do it for you, I'd put my information under that, and you could click box yes if you want the IRS to be able to talk to me instead of you if they have questions. All right. You get to part B here, Schedule B. This is just going to ask a ton of different questions. Okay, we'll briefly go through them here. For most of you, the answer to almost all of them is going to be no. The first one, they're going to want to know what type of entity is filing this return, whether you're a domestic general partnership, whether you're a domestic limited liability company, whether you're a foreign partnership, domestic limited partnership, domestic limited liability partnership, okay? You're going to know what this is. It's going to be based on how you filed an entity. Most of my clients fall into the domestic limited liability company. All right. Anytime during the tax year was any partner in the partnership a disregarded entity, a partnership, a trust, an S corporation, an estate, or a nominee or similar partner. All right. So this is basically just asking if any of the partners were anyone other than individuals. So one partnership can have ownership in another partnership. For most of you, this will not apply. The answer is going to be no. All right. 3, it's going to ask 2 different questions. At the end of the tax year, did any foreign or domestic corporation, partnership, trust, or tax-exempt organization, or any foreign government own directly or indirectly an interest of 50% or more in the profit, loss, or capital of the partnership? I'm just going to assume that for all of my clients, this answer is no. They don't have any kind of foreign ownership in their company. If you do, that answer is yes, and you got to attach Schedule B1. All right. Then Part B, did any individual or estate directly or indirectly an interest of 50% or more in the profit, loss, or capital of the partnership? All right, so this one, a lot of you will put yes. Most of you will put yes if one person owned 50% or more. All right, then you'll have to fill out Schedule B1. At the end of the tax year, we're in Part 4 here, did the partnership own directly 20% or more, or own directly or indirectly 50% or more of the total voting power of all classes of stock entitled to vote of any foreign or domestic corporation? Okay, so did the partnership own another corporation? For most of you, the answer is going to be no. So don't worry about filling that out. Own directly an interest of 20% or more, or own directly or indirectly an interest of 50% or more in the profit, loss, or capital in any foreign or domestic partnership, or in the beneficial interest of a trust. Again, most of you, the answer is no. The partnership file form 8893, election of partnership level tax treatment, or an election statement under section 6231A1B2 for partnership level tax treatment. For 90% of you, the answer again is no. Does the partnership satisfy all four of the following conditions? Okay, Part 6. This is a big one. All right, so let's go through these 4 questions, and I'll tell you why it's a big deal. So A, the partnership's total receipts for the tax year were less than $250,000. So for number 1, if your total gross receipts were under $250,000, you would click no. If they were over, you'd click yes. B, the partnership's total assets at the end of the tax year were less than $1 million. All right, so you're going to fill out a balance sheet, and if your total assets at the end of the year were under $1 million, the answer is no. If they're over, it's yes. C, Schedules K1 are filed with the return and furnished to the partners on or before the due date, including extensions for the partnership return. So are you filing this tax return and getting the K1s out to the owners before the extended deadline of this return? Okay? So it's a yes or no question there. The partnership is not filing and is not required to file Schedule M3. 99% of you will not file a Schedule M3. All right. And finally, so if the answers to all of these questions are yes, so if you have under $250,000 in gross revenue, if you have less than $1 million in net assets, if you're filing the return before the extended deadline, and if you do not need to file Schedule M3, basically what it means is you do not have to complete Schedules L, M1, and M2, which, to sum it up, means you don't have to do a balance sheet. For a ton of my clients, this is a big deal. They don't usually fill out their balance sheet, so not having to put it on their tax return is a big deal. Saves you on a lot of headaches, may save you on your tax prep costs. So you really want to look at Part 6, see if you can answer yes to all of those questions, and if so, you don't have to put a balance sheet on your tax return. All right, number 7, is this partnership a publicly traded partnership as defined in Section 469K2? Are you a publicly traded company? If not, the answer is no. 99.9% of you, the answer is no. During the tax year, did the partnership have any debt that was canceled, forgiven, or had the terms modified? Okay, so if you had a mortgage on something and you could no longer pay it and they canceled the debt or forgave it, or had they modified the terms of it to reduce the principal amount, the answer is yes. If not, the answer is no. Pretty straightforward. Part 9, has this partnership filed or is it required to file Form 8918, Material Advisor Disclosure Statement, to provide information on any reportable transaction? All I'll say is the answer for almost all of you will be no. If you don't know what it is, the answer is no. At any time during the calendar 2013, did the partnership have an interest or a signature or authority over a financial account in a foreign country? Okay. Did you have interest in a foreign bank? Most of you, 99.9%, answer is no. At any time during the tax year, did the partnership receive a distribution from, or was it the grantor of, or transfer to a foreign trust? All right. Again, do you have interest in a foreign trust? The answer is almost always no. Is the partnership making, or had it previously made and not revoked, a Section 754 election? Okay, 754 election, it's when you bring in a new partner and you're kind of changing the basis of the company. 99% of you, this will not apply. You will know whether this applies to you or not, because it's something you have to actually formally make an election of. So if you don't know what this is talking about, the answer is no. 13. Check this box if during the current or prior tax year the partner distributed any property received in like-kind exchange or contributed such property to another entity. If you had a like-kind exchange, which is when you sell one asset, make money on it, but don't pay the taxes right away because you're rolling that profit into another asset that's similar. Okay? It's a formal election, again, that you have to make. You will know whether you did this or not. At any time during the tax year, did the partnership distribute to any partner a tenancy in common or other undivided interest in partnership property? Okay? If you don't know what it's talking about, the answer is no. If the partnership is required to file Form 8858, information return of persons with respect to foreign disregarded entities, if you had nothing to do with a foreign entity, the answer is no. Does the partnership have any foreign partners? Pretty straightforward. If you have foreign partners, yes. If you don't, no. Enter the number of Forms 8865. Okay, that for most of you this can be 0. Did you make any payments in 2013 that would require you to file Forms 1099? So did you pay any of your independent contractors at least $600? If yes, the answer is yes. If no, the answer is no. Then part B, pretty stupid question here, but if yes, did you or will you file required Forms 1099? You better be putting yes to this. If you owe someone a 1099, you're telling IRS that you owe someone a 1099, you better tell them that you plan to send those out. Okay? So that's box 18. 19, enter the number of Forms 5471, information return. This is again a foreign question. If you had no foreign partners, nothing to do with foreign entities, the answer is no. Enter the number of partners that are foreign governments. This answer is going to be no. 0. Alright, again we got the signatures. Okay, Schedule K, this is going to come through from the information you've already given. Alright, this is just going to sum up everything you've already given, pull it through here. Alright, we get to Schedule L. This is the balance sheet. If you answered yes to those 4 questions that we went through in box 6, you do not have to worry about this. If you answered no, you have to fill out your balance sheet. Alright? So it's going to go through all the various assets, cash, notes and accounts receivable, allowance for bad debt, inventories, all the various assets, all the various liabilities. It's going to sum it up. They have to balance, and that'll be your balance sheet. Hopefully you've been tracking your balance sheet. You have some kind of software like QuickBooks that makes it pretty easy for you. You can just spit it out and enter it in this return here. Okay. Schedule M1. This is mostly going to be can be completely done based on the information you've already done, and same with M2. All right. Other than distributions, you're gonna have to distributions and contributions. You're gonna have to put in those yourself. All right. So that does it. Like I said, it can be a very confusing form. It is one that I'd highly recommend hiring someone to fill out for you. Again, we are taking on new clients. If you're looking for someone to do that, we can give you a quote. Or if you just want to get someone else near you, someone that you've always used, just please hire someone to do this for you. It's much more complicated than you'd think. And you can use this video to help get ready to give that to your accountant. The more organized you are, the less you'll pay. Alright, so good luck for this upcoming tax season. Hope to hear from you, and we'll see you soon.